The one big thing that we want to look at in this conference is how to systemize this revolution. And by systemizing, we are really saying, how do we promote innovation while at the same time ensuring two other things, financial stability and consumer protection. We need a balance. We can't just grow without appreciating the need for the different aspects. But the lenders should be here in a sustainable way for the future. The consumer should be taken care of. Their data should be protected. And they should feel that there is fairness in the way in which they are charged. And so systemization really means balancing out the different facets of the lending environment in Kenya. And that's what we want to look at. We want to see, is this innovation sustainable? Is it taking care of the consumer? Is it assuring this economy of the long-term benefits? Because without a very stable financial sector, when you have things coming in, going out in a very unreliable way, then that stability causes a lot of harm to the economy. There are big players that have really revolutionized lending in Kenya. In particular, we have the M-Shwari, which is run by the CBA in collaboration with Safaricom. And we have the KCB M-Pesa. This has been a big transformation, especially because the ticket items have been larger than the M-Shwari components. And then we have the Equity Bank, Easy Loan. Easy Loan Equity Bank has also revolutionized. So it's estimated that over 300 billion of lending portfolio is attributed to the emergence of these particular lending platforms. That is significant. A lot of consumers of credit are enjoying credit even from the non-bank products. And so we have Branch, we have Tala, we have a number of others that have emerged, which are not only local, but they have an international presence. And that's not something that one can ignore. And so it's a big market and it's a growing market. So we find that this is one of those opportunities that traditional lending in Kenya is having a linkage with the innovative lending practices. But now you see we need these low ticket items to be scaled up. And most of the clients now are wondering how they can benefit from bigger ticket loans using the mobile platform. And credit information sharing is one of the solutions for that, because the lenders will only be comfortable to increase the loan amounts when they are assured that this is a client that they understand. Credit bureaus are offering a great and important solution. And most of these lenders are finding that a growing credit bureau database is a more reliable database. And so it is our desire that the credit bureaus be able to access a wider range of sources, from the traditional bank data sources to the non-bank data sources, the SACCOs, the microfinance institutions, the utilities, as much as they get all this data from, and including even the fintech lenders. If the digital lenders can provide more data to the bureaus, the scores and the credit reports on the bureaus will become more reliable. And this will help banks to feel comfortable to provide larger ticket loans to them and reduce the loan interest rates as well. Now, you realize that interest rates is a big discussion in this country, and it has caused Parliament, on behalf of its representation, to put a cap on interest rates. It is understandable, because interest rates need to be affordable for this credit to become meaningful. Because, you know, it is a cost of business. And so SMEs and individual borrowers need to minimize the cost of the funds that they receive. But the interest rate caps are not a sustainable way to address the cost of lending. The credit bureaus, through the scoring techniques, are indeed going to provide the solution. And they are already providing credit scores that many of the lenders are already using. Now we need to make this more robust. We need to make the system more reliable so that the credit scores can become a key determinant in the pricing of these loans. And we need to encourage consumers to see the importance of this credit score. Having a better credit score, which is resulting in a lower interest rate, that is introducing even what you generally call discipline in the market. We need a disciplined borrowing community that is eager to repay their loans on time. And so this is an incentive. When you provide lower interest rates as a reward for a more disciplined borrower, it's a benefit to both sides of the equation. Credit information sharing from a socio-economic perspective is extremely important. First, because it guarantees stability of the lender. When you have a lender whose loan book is financially reliable, then you can be assured that this lender is in business tomorrow. And Wanjiko needs a financial system that is stable, where they can go borrow, they can be able to deposit their money without fear, they can be able to borrow from these institutions without being charged excessively. Institutions that are managed well, whose governance structures are good. So the loan book, the quality of the loan book, is probably one of the biggest factors in guaranteeing a sustainable financial sector. Credit information systems, they help lenders to be able to make good credit decisions that guarantee that there will be a steady stream of income to be able to pay off depositors and to be able to pay to support new lending requests. And so Wanjiko will benefit when banks have got a better understanding of the clients, they are pricing their loans much better, giving the right amounts of loans to clients who are not either under-provided or over-provided with finance and are able to monitor that loan book efficiently using the credit bureau systems. On the other hand, the credit bureau system supports Wanjiko by ensuring that they do not get over-indebted. It's a social disaster when you find people borrowing to pay other loans and the credit bureau does not have access to that information, the lender does not have access to that information. Any environment that encourages or incentivizes consumers to take more loans than they can afford to repay is a very unfortunate environment. So we need to protect the consumer when they go for more loans, to be able to be advised by the lender that you are going overboard in your borrowing, and so we are not going to be able to give you the full amount you are requesting or any amount at all until you lower the kind of exposure that you have right now. So the credit bureau is one of those sources of information that gives the lender a picture of the extent to which the consumer that is applying for more credit is exposed. And that is a very important source of information that then protects consumers from over-indebtedness. The challenges that we face today include the fact that not everyone who is lending is falling under any form of regulation. In particular, not everybody who is lending is providing data to the bureau. That is really disadvantaging clients, because when they are able to pay those loans, that information is not being captured so that it can improve the credit profile of this client. So it's a challenge when we see not everyone in the system, but we are very optimistic that more and more players are going to join the system. The other challenge we see is the capacity of lenders to be able to interpret, the staff in the lending institutions, to be able to interpret the scores that are being provided by the bureaus. That capacity needs to be built, and we are very glad that the central bank is working on a program with the World Bank to be able to introduce capacity building programs for financial sector lenders so that they can be able to be more efficient and better utilize the credit scores that are available through the credit bureaus. But as CIS Kenya, we are very keen to broaden this capacity building conversation. And we are developing a program, a comprehensive credit information sharing capacity building program that is going to be rolled out next year, 2019. And we'd like as many lenders as possible to enroll for this program, where we are going to train them on the use of credit bureau information and on credit risk management and how to complement the various sources of information to introduce a more risk-based pricing method in this country.